Hey everyone, welcome back to Corporate Decoder, the place where we decode the cryptic language of corporate filings. This year's report from Establishment Labs Holdings Inc. paints a picture of growth, but it has definitely got some interesting twists and turns, especially when it comes to their finances and their reliance on a key supplier. Let's dive right into the numbers. Establishment Labs is a global medical technology company, and their star product is Motiva implants. They received FDA approval for these implants in the US in September of 2024, which was a big deal, and the impact of that approval is really visible in their latest report. Now, this is a solid jump in revenue, over 27% higher than the previous year. A lot of this seems to be driven by their US market launch following that FDA approval, and they're seeing good growth in Europe and Latin America too. The US market alone brought in over $45 million in sales for 2025, which is really encouraging after just starting to sell there. And look at their gross margin climbing. That is a nearly 3.5 percentage point increase. This really suggests that the higher prices they can command in the US market are helping them significantly. It's a good sign that they are able to monetize their position in a key market. But it is not all smooth sailing. While revenue is up, they are still reporting net losses. Though these losses are decreasing, they still managed to turn a profit by losing less money, down from $84.6 million in losses last year to about $51 million this year. That is a huge improvement, nearly a 40% reduction in their net loss. This shows good progress in managing their expenses even as they grow. Part of that big operational expense increase comes from their sales and marketing efforts, which are crucial for a company like this. Their selling general and administrative expenses, or SG&A, did go up by about 18%. That is understandable given their US expansion, increased shipping costs, and some expenses related to acquisitions. They also incurred a significant amount in research and development, which is essential for staying innovative in the medical device field. The research and development line item shows a slight increase, mainly due to personnel costs. They're investing in future products, which is important, but also contributes to the ongoing losses. Now, let's talk about something really critical for this company, their supplier for a key raw material. This is a big red flag. They rely entirely on Aventor for their medical grade silicone. While Aventor supplies many in the industry, they are the only source for Establishment Labs, and here is the kicker. Aventor has indicated they might renegotiate their supply terms and are not keen on automatic renewals. This dependence on a single supplier creates a massive risk. If Aventor decides to hike prices significantly, or if their supply gets interrupted, Establishment Labs could be in serious trouble. Replacing them would be a long and costly process, potentially leading to manufacturing disruptions and a hit to their finances. The company's debt load is also quite substantial. They have over $246 million in debt outstanding, mostly from Oaktree. While they are meeting their debt obligations and covenants, this level of debt, combined with ongoing losses, means they are always under pressure to perform. Let's look at their cash position and how they are managing it. They used over $50 million in cash from their operations this year. That is not ideal, and it means they are burning through cash to keep the lights on and grow. They did bring in a good amount of cash from financing activities, including new term loans, which is how they are funding their operations and expansion. Investing activities show them spending money on property and equipment, mostly for that new manufacturing facility. This is a necessary cost of growth, but it adds to their cash burn. Despite the financial challenges, Establishment Labs is pushing forward with new product developments and expanding its market reach. Their focus on innovation, like the Mia Femtech procedure and the Preserve technology, shows a commitment to staying ahead in a competitive market. The robust clinical data they are presenting for their Motiva implants, showing low complication rates, is also a major selling point. However, the company faces numerous risks as detailed in their filings. This statement really sums up their core challenge. Profitability is directly tied to the success of those Motiva implants, and a slowdown in demand or increased competition could really hurt them. They are also heavily exposed to economic and political situations in emerging markets, which adds another layer of uncertainty on the leadership front. There was a significant change in May 2025 with a new CEO taking over, though the former CEO remains involved in an advisory role. This kind of transition can bring fresh perspectives, but also potential instability if not managed well. Looking at the overall picture, Establishment Labs is a company in a growth phase, heavily investing in its US market entry and product development. The FDA approval was a huge step, and the financial results for 2025 reflect that positive momentum with increased revenue and a reduced net loss. However, the company's heavy reliance on a single supplier for a critical raw material is a serious concern that investors should pay close attention to. Their significant debt also places them in a position where execution is paramount. Overall, Establishment Labs is showing progress, but the journey to consistent profitability is still ongoing, and the risks, particularly around that silicone supply chain, are very real. They need to continue to execute strongly, manage their expenses, and ideally diversify their supplier base to mitigate that critical risk. What do you think about Establishment Labs' strategy and financial health? Let me know your thoughts in the comments below. If you found this breakdown insightful, please give this video a thumbs up and subscribe for more of these deep dives into corporate filings. And hey, join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next decoding session.